Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, March 9th, 2023. It's now 5:47 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The daily chart has printed the combo and sequential sell setup 5 count. And to negate that for end of day today on the 9th, there must be a close below 45.64 for the price flip to the buy setup count 1. Price in the pre-market hours for the S&P 500 at 5:50 a.m. on the 9th is 39.85. The S&P 500 daily chart will more than likely start the day off with the price flip to the buy setup count 1. It always has a chance to redeem itself by staying above 45.64 for end of day today on the 9th. The trend factor down 2 and sell TDST level are in danger of becoming qualified for end of day today on the 9th. There must be a close below the trend factor down 2 and the sell TDST levels. If it goes in between them, the trend factor down 2 becomes qualified. Close under the TDST line and both of them will become qualified. Get under the TDST levels and tick lower intraday, lower than this low on the 2nd, and the D wave, down wave 3 and D wave, up wave C will print. Price did close under the conversion line again. The NYA to SPX ratio, basically value versus growth, on the daily chart looking back 60 years, shows that value tried to get through the 4.0 relative performance ratio level there twice, knocked at the door and was turned away, and now there's another growth spurt. And you can see since the great financial crisis that it was more than a growth spurt. And if eventually the Fed has to capitulate and say we're going to have to be satisfied with an unsatisfactory 3 to 4% inflation level and forget about his 2% level, then this growth level could surpass 3.5. One would have to wonder how low could it go, all the way to 0? Can it go into negative? And if the Fed sticks to its guns and really goes for the 2.0 inflation level and kills the world economies, then this will get through the 4.0 and start heading up into some of these levels here. You can see what happened in the dot-com bubble burst. All the technology stocks crashed to the ground in flames, and the value stocks really had their decade in the sun there. The S&P 500 support and resistance levels big board chart shows the gray areas at the pivot point and S1. And price in the pre-market hours for the S&P 500 at 6:24 a.m. Central Time on the 9th is 39.81. And to the downside is trend factor down 2, the monthly simple moving average 12, the baseline 26 bars back concerning the lagging line, S2, weekly channel 3 low, and the bottom of the cloud. And to the upside is the daily conversion line, 50 EMA, 200 EMA, relative retracement up 1, the 50 simple moving average, weekly diamond bottom extension, perfect uptrend channel bottom line, and the top of the cloud. And both the S&P 500 daily AD line and NASDAQ 100 AD line for the daily chart are both under their 21 EMA signal lines. And it looks like the calm before the storm, the ROC 1 is right at 0, and the green line just about at 0, and the ATR2 is down in the green zone, and the PPO extreme is right around 0, also at negative 0.22. The New York traditional McClellan breadth oscillator to get back to 0 would require 2,291 advancers over decliners to get back to 0. And the calm before the storm is waiting for the storm to hit, and it could be the jobless claims, 195,000 expected by Market Watch. I believe they used the Wall Street Journal. Last time there was 190, so a beat to the upside there would be good news, and anything less than 190 would be very bad news. And then tomorrow is the biggie, the employment report, and you can see last time there was 517,000, shocker, and now they're predicting 225,000, so that's quite the low bar. You would think anything under that would be good, but that was horrible, so it needs to do a lot better than that to the downside. So these two are kind of reversed, for bad news is good news. Have a great day.